Welcome back. Today, we're diving into the latest tech breakthroughs and financial trends that are shaping our world. Let's get started. Accenture's strategic enhancement of its cognitive network platform signifies a significant move to address the pressing issue of high network infrastructure costs in the telecommunications sector. By focusing on autonomous networks and agentic AI solutions, Accenture positions itself to improve service agility and financial performance for its clients, which is crucial in a highly competitive market. The absence of binding AI acquisitions recently suggests a cautious approach within the sector, potentially reflecting broader economic uncertainties or a reassessment of investment strategies. The absence of AI company acquisitions in the last 24 hours highlights a potential pause in M&A activity within the sector, which could indicate market saturation or a strategic reassessment by firms. This trend follows Accenture's recent acquisition of a cloud-native AI solution from Avanseus, suggesting that while major acquisitions may be slowing, companies are still actively seeking to enhance their AI capabilities through targeted investments. Observers will want to monitor if this slowdown signals a broader shift in the investment landscape, or if it is merely a temporary lull. The competitive landscape of AI investment among big tech firms reveals significant disparities in strategic positioning and potential for growth. Google's impressive 62% stock gain highlights its effective capital deployment in AI, establishing it as the frontrunner. In contrast, companies like Meta are hindered by infrastructure limitations, and Apple remains uncertain in its AI ambitions, suggesting that the race for dominance in AI not only affects stock performance, but also the underlying technological capabilities of these industry giants. The potential acquisition of Mistral by Apple highlights a critical juncture in the tech giant's strategy as it seeks to bolster its AI capabilities amid intensifying competition. By integrating Mistral's talent and open-source philosophy, Apple could enhance its offerings while maintaining alignment with its existing ecosystem. Alternatively, reliance on OpenAI's tools like ChatGPT may reshape consumer behavior and drive iPhone sales, emphasizing the growing importance of AI in consumer tech. The recent contracts awarded to federal and intelligence agencies for cloud services, augmented reality systems, and satellite networks underscore the increasing intertwining of government needs with big tech's AI capabilities. This trend not only solidifies the dominance of major tech companies in the rapidly evolving AI landscape, but also raises important questions about the implications for privacy, security, and the overall influence of corporate entities on public policy. As these relationships deepen, the balance of power between private innovation and public oversight becomes increasingly critical. The substantial funding rounds for AI startups in 2025, particularly in the US, underscore the escalating investor confidence in artificial intelligence as a transformative technology. With notable raises like OpenAI's $40 billion and Anthropic's $13 billion, the sector is not only attracting significant capital, but also solidifying its position at the forefront of innovation across various applications, from generative AI to infrastructure. This trend reflects a broader commitment to developing sophisticated AI solutions, which could reshape industries and drive economic growth in the coming years. The substantial $2 billion Series C funding round for Mistral AI underscores the growing prominence of European players in the AI landscape, signaling a shift away from traditional US dominance. With a valuation around $14 billion, Mistral's success may inspire more investors to explore opportunities beyond the US market, potentially diversifying the global tech investment landscape. This trend could reshape the competitive dynamics of the AI industry as it matures. The release of advanced AI models like OpenAI's GPT 5.2 and Anthropic's Claude Opus 4.6 signals a significant leap in capabilities, particularly in multi-step reasoning and safety features. Mistral's focus on open-weight models and low inference costs could democratize access to high-quality AI, making it easier for organizations to implement these technologies in compliance with regulations like GDPR. As competition intensifies among these leading firms, the emphasis on efficiency, multimodal capabilities, and open-source deployment strategies will likely reshape the AI landscape and drive innovation further. The EU AI Act represents a significant regulatory milestone, establishing a comprehensive framework that categorizes AI systems based on their risk levels. This approach not only aims to protect citizens from harmful AI practices, but also provides clarity for developers and businesses navigating compliance. As the Act phases in over the next few years, its implications will likely influence global AI policies, emphasizing the EU's role as a leader in tech regulation. The upcoming EU AI Act signifies a critical shift in regulatory oversight for artificial intelligence, with compliance deadlines stretching into 2027 and beyond. This framework will not only mandate risk assessments and transparency for high-risk AI systems, especially pertinent to sectors like finance, but also influences global players by extending its reach to non-EU providers. As organizations prepare for these obligations, the emphasis on early governance and audit mechanisms underscores the EU's commitment to ensuring responsible AI deployment while fostering innovation. The predicted M&A activity in the holding company sector highlights a significant shift in the advertising landscape, as players like Dentsu may reshape their operations amidst heightened competition and consolidation. The rise of agencies acting as intermediaries between brands and creators underscores the growing importance of influencer marketing, which is becoming a pivotal strategy for brands seeking authentic engagement. Moreover, the expansion of platforms like Pinterest into CTV advertising illustrates the convergence of digital and traditional media, indicating a strategic pivot towards integrated advertising solutions. The shift in private equity firms towards innovation-led value creation through AI highlights a significant evolution in investment strategy, moving beyond traditional cost-cutting measures. By integrating AI solutions that can enhance operational efficiency and generate substantial EBITDA uplifts, these firms not only improve portfolio performance, but also position themselves more favorably in a competitive market. This strategic focus on AI adoption, supported by dedicated teams and governance frameworks, could redefine success metrics in private equity, making efficiency gains more sustainable and impactful. The growing emphasis on generative and agentic AI among private equity firms underscores a pivotal shift towards digital sophistication in the investment landscape. With 54% of firms prioritizing these technologies, it highlights limited partners' increasing demand for transparent strategies that leverage AI to drive value creation. This trend not only reflects the evolving nature of investment strategies, but also signals a broader acceptance of AI's role in enhancing operational efficiency and decision-making within the sector. The emergence of proprietary AI opportunities within private equity (PE) acquisitions signifies a strategic evolution in the sector, blending growth potential with risk mitigation. This shift could lead to more robust portfolio performance. However, the successful implementation of AI hinges on the ability of leadership in portfolio companies to navigate its complexities, a challenge that many CEOs currently face. This gap in technical understanding may hinder the full realization of AI's transformative potential, underscoring the need for targeted leadership development in the PE landscape. The implementation of AI across traditional industries, such as manufacturing and logistics, is proving transformative, driving significant efficiency gains and cost reductions that enhance EBITDA margins. With 95% of manufacturers leveraging AI for supply chain management, the scalability of these technologies presents a compelling case for investment, particularly as small efficiency improvements can yield substantial financial returns. However, the lack of focus on AI applications in the energy and media sectors suggests a missed opportunity for similar advancements, indicating that these industries may lag in operational optimization unless they embrace AI-driven solutions. The emergence of AI cloud agreements underscores the intricate balance between innovation and regulatory compliance in the tech landscape. As companies increasingly leverage proprietary and data licenses, the clarity around ownership and usage rights becomes paramount, especially given the potential for IP disputes and compliance with international laws. Strategic partnerships, such as those seen between Adobe and NVIDIA, highlight how collaborative efforts are shaping the AI ecosystem, potentially leading to more robust and compliant AI solutions. The recent surge in data licensing deals among major tech players highlights a pivotal shift towards strategic partnerships aimed at bolstering AI and cloud capabilities. Companies like Shutterstock and Adobe are not just enhancing their offerings, but are also significantly increasing revenue streams, indicating a strong market demand for quality training data. This trend underscores the importance of collaboration in the tech landscape, as firms seek to leverage each other's strengths to accelerate innovation and maintain competitive advantage. The recent strategic partnerships in the tech sector, such as those involving industrial IoT data and platforms like Google Gemini, illustrate a growing trend toward collaborative approaches in AI development. These agreements allow companies to leverage each other's data and technology without the complexities of mergers and acquisitions, fostering innovation and revenue growth while maintaining proprietary control. As these partnerships become more common, they may reshape the competitive landscape, emphasizing the importance of data access in the AI training ecosystem. The emergence of specialized executive search firms for AI talent underscores the escalating demand for top-tier leadership in a rapidly evolving sector. By prioritizing skills over traditional credentials and leveraging AI to streamline hiring processes, these firms not only enhance talent acquisition efficiency, but also foster greater diversity within organizations. As big tech executives transition to AI-centric roles, the competitive landscape for skilled leadership is set to intensify, signaling critical shifts in both startup and enterprise strategies for navigating the AI revolution. Thanks so much for tuning in today. If you enjoyed the insights, make sure to like, subscribe, and follow us for more daily updates in tech and finance. See you next time.